To start off with, FICCI's survey itself is showing nearly 80% of industry is optimistic, with 50% expecting 7 to 8% GDP growth next year. Tell me what's driving this kind of confidence and what could actually still derail it?
Right. So I think the government has done a lot in the last 1 year, which was giving confidence largely on the consumption side. If you look at what was happened in the budget with respect to revised income tax slabs and then GST 2.0, nearly about 1.5 lakh crores was put in the hands of the consumers. The biggest challenge that we faced was not enough private capex, but now with consumption going up, we are seeing that story slowly change. Capacity level utilizations have gone up, and we believe that going forward, there will be much more private capex participation in the overall growth story. So I think to that extent, the mood is fairly positive. Macroeconomics are strong, and I think that the continued focus on manufacturing and exports is what we are looking forward to going forward in the coming year.
Right. Nana, if, I could pick up on the same time or the same point with you. What we're seeing right now is industry is backing fiscal prudence with expectations that the 4.4% deficit target will be met. How critical is fiscal credibility today for investor confidence, especially global capital at this juncture?
So fiscal credibility continues to be important. The government has focused on that continuously for the last 5 years, from about 9% fiscal deficit now to about a target of 4.4%. That has been a critical mission for the government, and I think that is continuing. In my view, a little bit of slippage is also okay from the target because we've been fairly disciplined. But largely, we hope that, or we believe that the fiscal deficit targets will continue to be very closely met and continue to be a focus area for the government.
Nana, if I could ask the same question to you, how critical do you think is fiscal credibility for global capital to come back? Ms. Kidwai?
Sorry, I didn't realize you were waiting for me. I think fiscal credibility is important at a time when geopolitical factors have a play, because at the end of the day, we need to be able to withstand shocks as well. And we have, in fact, already seen the benefit this year of global ratings, credit ratings, seeing improvement. And these are indications of the fact that our macroeconomic policies, which have been strong, reflecting both in growth and fiscal prudence, are being rewarded. So I do think this is important. But in itself, the shocks that come from external factors, despite our macroeconomic stability and indeed strong performance, is reflected, unfortunately, in our currency and the volatility therein, which has been wiping out a lot of the gains, at least for the foreign investor communities, which is why we've been seeing a lackluster performance from offshore. So the global outlook worries about rupee and the rupee stability, but certainly looks at the importance of India as a strong domestic market, which they want to play in. In order to counter this, I think, exactly as President Vicky Anand just mentioned, the whole play on exports becomes very important. So both as a manufacturer for our Atmanirbhar plans, whether it's in the electronic sector or indeed for some of our traditional sectors which have seen some headwinds because of tariffs from the US, I mean apparel, leather, etc. All these sectors, some need support, others like electronics, where we've seen good success. FICCI has been pushing to get specific SEZ set up to make sure that we can get a cluster approach going, which helps the electronic sector go into the export market with a stronger footing. And the FICCI survey actually showed up that there's much to be done in terms of customs and duty streamlining in terms of the input we have got from the CEOs that were surveyed. So this is something that is clearly in our court to clean up. The entire duty structures and the way we implement this is important also to streamline and encourage exports of products.
So, Mani, if I could get you into the discussion, do you believe that India has the fiscal headroom to push growth without compromising stability at this juncture?
I assume it's for me.
Yes, Sandeep, for
Yeah.
you.
Yeah, I think so. The government has done a very good job in reducing the fiscal deficit. And frankly, there is headroom available now for them. They've been on a very good path. And I think the focus in these times of turmoil, external turmoil, should be on focusing on the domestic economy, improving our infrastructure, improving our logistic costs, making India more competitive. And if that, for that, if the fiscal deficit goes a little here and there, I don't think there would be any negative marks globally given to India for that. Currently,
Anand,
our
if I
domestic economy is doing well. Consumption is going up. The GST 2.0 reforms were very well timed and well accepted, and they have given benefit to the lower end of India. And consumption at the upper end, in any case, is quite bullish and buoyant. So I think we need to support that, particularly because of the issues of tariffs in various parts of the world. The exports are under a little bit of pressure. And as we find more markets, which does take time, I think we will have to do the heavy lifting will be done by the domestic consumers. And we're very hopeful that they will live up to this. So I think
right.
fiscal deficit is important, but it's not the only parameter on which we should judge the economy.
Understood, then that's a very valid point. Anant, if I could get you back into the discussion on jobs, capex, and the manufacturing push. Tell me, job creation, infrastructure, manufacturing, they clearly emerge as top priorities. From an industry standpoint, Anant, where should the budget place its biggest bet to try and create quality employment, which clearly seems to be the need of the hour right now?
Right. So two areas come in mind which will really propel manufacturing. One is an increased focus on defense expenditure. We've seen the world has changed in the last year with respect to many wars happening. Technologically, there have been changes with respect to drones, unmanned aerial vehicles, and so on. So increasing the outlay for defense is one area that will help boost manufacturing. In addition, defense research with DRDO, etc., will make is one of FICCI's recommendations. The second is we've seen a lot of success on the EMS side. Can we create a mega industrial park, much like Shenzhen or the one we have in Vietnam, where we get together all key electrical components player closer to each other in a value chain, which can result in higher value addition and scale advantages for the industry. The third is on the export front with respect to the ROTDEP scheme. We feel that some more outlay will certainly help in export promotion, which will then in turn help manufacturing as well. And finally, I'd say continuation of the reform agenda that the government has been on. They've had the labor codes, but some more can be done with respect to power and land acquisition over the course of the year.
Sandeep, I want to pick up specifically on the point about manufacturing with you, especially Industry 4.0 and defense. Features very prominently in FICCI's recommendations, and I was going through that note. Are current incentives, you think, enough, or does India need a more aggressive manufacturing roadmap, Sandeep?
So I think the PLI scheme, if you personally ask me, has been a great success. As of September this year, 12.6 lakh jobs have been created and over 2 lakh crores have been invested. I think this is a good move by the government, and more sectors should be covered in PLI, particularly those which are very critical to India's export competitiveness or India's safety and security. So, for example, only 120 crores is being allocated for drone manufacturing in PLI. That, of course, is too small. Similarly, there is talk now of critical minerals, rare earths, and we should have PLIs for that and encourage investment domestically into these sectors. I think manufacturing We all talk about it, but unfortunately, it has more or less remained static as a percentage of GDP. We do need to get it to 25% of GDP, and that will bring long-term, security in terms of inflows of foreign exchange to India. And these FTAs that we are now signing, for example, the latest one with Europe, India is a competitive manufacturing base. Europe is not. So it is a natural ally to India for promoting of Indian manufactured goods for export to various parts of the world. And I think manufacturing has to be the focus. In this, one suggestion that I have is one of the key components of manufacturing is electricity, of any kind of manufacturing. And electricity rates in India are generally higher than our neighboring countries, Vietnam, Thailand, Indonesia, Malaysia, who are our big competitors. The farmers are subsidized with given subsidized electricity, and the government can continue to do so, but through a direct benefit scheme, not to let industry cross subsidize agriculture. So the farmer will not be affected. He will still get the electricity at the rates that they are getting today, but the industry will be reduced the burden of high electrical charges, which are more or less prevalent across all states of the country. It will make manufacturing much more competitive.
Right, and that's a very good point that you just made. But Ms. Kidwai, FICCI has suggested higher defense capital outlay and deeper support for emerging sectors like drones and AI-enabled systems. How strategically important is defense manufacturing, not just economically, but geopolitically, especially in the times that we're living in right now?
So I think defense, and as was brought out by Anand, is a very key aspect both of Atmanirbharta in terms of giving us the security we need, but also our ability to export. And I think what FICCI's sort of analysis suggests is that it's not just about exporting the product or manufacturing here, but the actual capital outlay that government itself makes becomes important, so that we're not spending top dollar just importing the equipment, but that we continue to make these outlays to develop our own capabilities to manufacture here. So as manufacturing goes, exactly as mentioned, defense, drones, electronics, these are newer areas for us where we are already seeing early success. So let's build on this and ensure that we can, in fact, push on along these lines.